Item number 1 in the list I am about to give you launched in 2003. It has paid a dividend every single quarter for more than 20 years now, through a financial crisis that vaporized half the S&P 500, through a pandemic that shut the world down, and through a rate spike that broke the bond market. Item number 11 on this list quietly tracks the oldest stock index in America, and almost nobody owns it. And item number 14 is the one that, if I had to pick a single dividend strategy and lock it in a vault for the rest of my life, would be the one I would actually pick. I have spent the last 7 years building dividend portfolios for myself and watching what real money does in real crashes, and what I'm going to walk you through now is what I call the decades test. 14 funds, 5 major drawdowns. One question: did the dividend keep coming? By the end of this video, you will know exactly which of these 14 funds deserve a place in a serious portfolio, which ones are coasting on a famous name, and which one has the deepest historical evidence of having survived everything the market has thrown at it since the 1980s. I ranked these by one criterion only. Did the fund, or in cases where the fund itself is younger than a particular crash, did its underlying strategy and the companies inside of it keep paying and keep raising their dividend through the worst markets we have on record? Specifically, 5 drawdowns. Black Monday in 1987, when the S&P 500 fell more than 31% peak to trough and dropped over 20% in a single trading day. The dot-com crash from 2000 to 2002, when the S&P fell roughly 47% and the Nasdaq fell 78% and took about 7 years to recover its old high. The global financial crisis from 2007 into 2009, when the index lost 37% in the calendar year of 2008 alone and did not recover its old high until 2013. The COVID crash in March of 2020, when the market fell almost 34% in 5 weeks and then recovered in 5 months. And the rate spike of 2022, when the S&P fell about 25% and took roughly 15 months to recover. If a fund or its underlying strategy did not survive at least 4 of those 5 with dividends still rising on the other side, it is not on this list. I also excluded a few funds you might expect to see. The high-yield ones with bloated expense ratios. The international one with a methodology that has been quietly rewritten 3 times. The aggressive yield chasers that wear a famous brand badge but blow up the moment. Energy or financials weaken. We will talk about why in a moment. Quick reminder, and you are going to hear me say this twice in this video, because the math actually matters here. I am not your financial advisor. Past survival